Folks, prepare for the worst. I'll talk about that and then get into the latest home prices and insights for the City of Toronto for week ending November 22nd, 2023. There are thousands of you that watch this channel every single week, and 60% of you are not subscribed. So if you like the content and you want to be reminded when these new videos come out, do me a favor, consider subscribing. Now, let me get back into what I want to talk about. Prepare for the worst. Let me tell you a story. When I was 18, 19 years old, living in Toronto, I decided to take a trip to Vancouver. I was going to drive my car, Mercury Lynx. I don't know if many of you remember what the Mercury Lynx looked like, but that was the first car I owned. And I planned, I prepared, I budgeted for how much gas was going to cost me to go. I planned for accommodation when I was there. I planned for my stops along the way. I planned for food for the whole trip while I was away. I had it all planned. And I'm halfway through my trip. I'm in the middle of Canada in the prairies, and my engine light comes on. I'm flying on the highway. My engine light comes on. Smoke starts coming out of my engine. It shuts off. I pulled over. Can't figure out what's going on. Tow truck eventually shows up, takes it to the shop, and the shop says, I have no oil. Somehow along the way, I lost all the oil in my engine and the engine was seized. I needed to basically rebuild the engine. The car was toast. I had to spend thousands of dollars rebuilding this engine. I didn't budget for that. I didn't have the money for that. I had to call my dad to help, and for me to get back home, take a bus back home. I canceled my trip. All the planning, all that was for nothing because of this unforeseen, unplanned for situation that happened to me, and that was my engine failing or seizing. Now, somebody early on in my trip when I was planning said, hey, make sure you plan for your car to break down. Make sure you plan for your engine to seize and rebuild. I'd probably wouldn't have gone on that trip, or maybe delayed it another year or two, because that would have been, at my age, 18, 19, having a part-time job would take me a lot of time to save that extra money. I'm telling this story because it does relate to many of the situations that I'm speaking to clients with today. Not about their cars or their trip, but their home purchase. I've had several calls of buyers in financial stress. Too many of those calls are from people that recently closed. And some of those situations, they're in that financial predicament because one of them, either the husband or the wife, has lost their job straight after closing. Now, this happened to one of my clients several years ago. We closed on a property. Literally a week or two after closing, husband loses his job. He was the main breadwinner between the husband and the wife, loses his job. But they had a few extra bucks put aside to deal with unforeseen circumstances like that. Plus, it was the kind of climate, the kind of employment climate that he found a job fairly quickly. So it was kind of like a speed bump. It didn't really affect their life that much. Once the first day or two or three or week of drama passes, that, oh my God, I can't believe I lost my job, they sorted everything out fairly quickly. But that was several years ago in a totally different economic climate that we're in today. The possibility of somebody losing their job, and let's face it, nobody plans for that. If somebody was to lose their job, that would really be preparing for the worst, wouldn't it? That would be totally unexpected for most buyers. I mean, they do everything they can to save up a down payment. They plan for closing costs, and land transfer tax is the biggest part of closing costs. And if you're buying in Toronto, it's double what it is everywhere else. It's a lot of money. So you close. You maybe even have a few bucks in reserve to paint, to buy some furniture, because you know you're going to need furniture. And you plan for all that. Very, very few people plan for one of the people on the mortgage to lose their job. But in this economy, in this climate, this market that we're in, it can happen. And it seems more likely than a few years ago that somebody could lose their job today. And the possibility of replacing the job is harder today than what it was a few years ago. So, lots of people in a situation today that they didn't plan for, but yet it happens. I'm not necessarily telling you exactly what you need to do, but at the very least, you got to have these conversations before you start buying properties. What if one of us lose our jobs? Do we have a contingency plan? Or if you've recently bought and you've never had this conversation, have the conversation. What should we do? What's the plan? How can we deal with this? Because it's becoming more and more of a reality for many people. And if it's not losing your job, it's your mortgage payments doubling. How do you afford all this? How do you deal with all this? These are the real life situations happening to the public today, happening to all of us today. And no matter where you're from, what you do, what kind of financial position you're in, anything can happen at any time. We really gotta sometimes just plan for the worst. If you think this video can help somebody you know, please pass it along. If you get value from what we're talking about, subscribe. And if you want to speak with me about your real estate situation, selling, buying, it's really simple. You could click up here to my calendar, or there's a link in the description to my calendar. Book a time that's convenient for you, and we'll talk about whatever's on your mind. Now, let's get into the numbers. Folks, it's important, and it would be wise to have these conversations about what if worst case scenarios, because it's becoming reality for a lot of people these days. Let's get into the numbers. Here we have a summary. This is just for the city of Toronto. Condos, semis and towns, detached properties. There's a couple little notes I wrote here. Here's Labor Day line here. Post Labor Day, this is the fall market. Pretty soon, there'll be a line in January talking about this is the new spring market. But right now, we're still talking about the fall market. And if you kind of look at the high points for the fall, we are down from the high points right after the fall market. The gap between condos and detached, you got to add $857,000 to the average condo price to get to the average detached price. Last week, it was a little over $900,000. This week, $857,000. Let's start off with the City of Toronto detached properties broken down by week for a whole year. Here's the line again, post Labor Day. It's pretty clear. Average prices have been coming down. We're studying these, or we're charting these numbers on a weekly basis. So you're going to get the peaks and valleys. You're going to get the ups and downs every single week. But we're after the trend over time. And it's pretty clear prices are coming down, or average sold prices are coming down. The amount of properties that sold actually jumped up from the previous week. Jumped up, 124 detached properties are sold. And when you compare since the beginning of October, that's actually a pretty good week. We were under the impression, and I've been saying, yeah, sales have been dropping, but not this week. 124 detached properties were sold. 19 of those were at $2 million or more. And again, average sold price from the previous week came down to $1,556,000. 1,556 is 5% higher than where we were this time last year. For the same week, this year we sold 19 properties at $2 million or more. A year ago at this time, 17 properties were sold at $2 million or more. So we said average sold price is 5% higher than what it was a year ago. The median price, it's gone the other way. It's 4% lower than what it was a year ago. And if you look at the dotted line, which is the 4-week moving average, makes it sometimes simpler and easier to spot a trend. You can see average price and median price over the last 2 months or so trending down. Of the 124 that sold, 31% sold at list price or more. That trend, selling at list price or more, that percentage has been trending down. And listings, very clearly trending down. And active listings, the amount of properties available for sale, has been trending down, but very, very slowly. Now, months of inventory has come down from the previous week. So let's look at this for a second, or think about this. Active listings has been coming down, which would imply the market's tighter, but that's only if sales were really going up. They did go up from 1 week to the next, and that's why overall active listings came down. But when you look at not active listings, months of inventory came down. So when we look at 3.2 months of inventory, and we're trying to figure out what direction is months of inventory going, because in some pockets, some neighborhoods, some home types, you could see it clearly increasing almost every single week. Here, for the last 2 months or so, we've been hovering between 3.1 and 4.1. And if we eliminate the high one, then it's 3.1 to 3.7. And now we're sitting at 3.2. So it's kind of been in the 3 range over the last 2 months. But prior to that, we were below 3 at 2.5. So it has jumped up and has kind of stayed in the 3 months plus range for a while now. So months of inventory is definitely up. And that's for all of Toronto, detached properties only. Let's break Toronto down into 9 different areas. And there's a couple of things I do want to point out. Scarborough, as far as sales go, Scarborough is first place. It often is, almost every single week. There's more sales done in Scarborough as a region than any of the other areas we've got broken down, for a couple of reasons. One is Scarborough, geographically, population-wise, is an enormous area. It's very big when you look at some of the other areas that we got blocked off. But also, Scarborough has one of the lowest average sold prices. So it's very attractive for people to be buying. Remember, this is just for detached properties. Average sold price in Scarborough for week ending November 22nd is $1,107,000. That's the average sold price for a detached property. 47 of those were sold for week ending November 22nd, first place. Second place, 16 properties were sold, 16 detached properties were sold in York Mills and Rosedale. And the reason I'm bringing that up, that it's second place, is because the average sold price in Rosedale is $3,075,000. It is a big, big difference. No, I know I've been saying, yeah, you know, average sold price in Scarborough is so much slower. That's why there's so much activity. Well, how do you explain an average sold price of $3 million? Second place, 16 detached properties were sold. Third place, 14 properties, 1.8 million, almost 1.9 in the East York Riverdale Beaches area. So just goes to show you, some people do have the kind of money out there that it takes to buy in a neighborhood of average sold price over $3 million. Here's semis. 37 semi-detaches were sold. 6 of those were at $1.5 million or more. Average sold price came way down from the previous week, sitting at $1,140,000. Prices for semis are dropping. Compared to last year, 1140 is 5% lower than where the average sold price was a year ago. Median price is 7% lower than where we were a year ago. Months of inventory sitting at 2.3 for semi-detached properties. Townhouses, only 11 freehold townhouses were sold. None of those were at $1.5 million or more. And average sold price, just a couple bucks, climbed up to $1,141,000. So it's just up from the previous week. $1,141,000 is 3% higher than where we were this time a year ago. The median price is 13% lower than where we were this time a year ago. And months of inventory climbed up for townhouses, sitting at 3.4 months of inventory. Condos. These are condo apartments. There's no condo townhouses, broken down by week for a whole year. 174 condo apartments were sold. Now, 174 is a really good week. Post Labor Day, it's our second best week. And our previous highest week was right after Labor Day at 176 condos sold in 1 week. And when you draw a line, it's kind of really tough to point out and say condo sales have been dropping. Prices have been dropping. That's pretty clear, although it shows signs of going up a little bit and then down. But overall, prices for condos have been dropping. But sales, not so much. It's been pretty steady. And 18 of those condos sold at $1 million or more. Compared to last year, 699,000 is 5% lower than where the average sold price was a year ago. The median price is 1% higher than where we were a year ago. Sales of 174, 16% of those sold at list price or more, and that's way down compared to where we've been in the past. Listings are dropping. Sales, not so much. But listings on a weekly basis are coming down. Active listings is slowly coming down. Months of inventory went from 7.1 as a high. We're now at 5.7 months of inventory. So still quite high, but lower than what it was before. And it's pretty clear months of inventory for condos has been increasing. Here's a quick summary. You know, condos is way up here at 5.7. Detached towns, semi, I would say in most cases, you're going to experience more of a balanced market. In some cases, it's going to be more of a buyer's market, especially if you're dealing with condos, and it depends on which pocket you're in. 5 months or more, 5 months of inventory or more is considered it says seller's market. That's a mistake. That should say buyer's market. Folks, thanks for watching. Have an awesome day.